David Morgan with you in the Investment Pitch Studios at the Vancouver Resource Investment Conference 2016. Today I have Jim McDonald from Kootenay Silver across from me. Jim, we've spent some time together.
Yeah.
We always get new people though. Why don't you give us a real quick background on Kootenay Silver?
Yeah, okay. Well, Kootenay Silver is a junior exploration company. We're focused in Mexico. We've got a flagship project called Promontorio where we've got 92 million silver equivalent ounces outlined in a measured indicated category. And we've got a really exciting new discovery called La Negra on the same property, just 7 kilometers to the north, where we're hitting these fabulous results. The best hole was 156 grams silver over 200 meters. And that starts right at surface. So it's this exciting open pit, low cost mill leach or leach operation potential. And we see that as becoming probably the first asset that we have that gets into production.
And as you know, we've been following the story for a while, and of course that was coming into fruition when we spoke together at the PDAC last year. And something really big has happened to the company recently. There's a merger, and we've been talking about that in our reports. You've done a merger acquisition with North Air. Can you give us the outline of what's taking place here?
Yeah, well, what we're doing is we're doing an amalgamation merger with North Air. They're located in Mexico and the next state to the east of us. And they have 52 million ounces of measured indicated silver and another 11 million ounces in the inferred category. The whole premise here is you can actually acquire ounces right now today far less than you can find them. And so this is a consolidation story now, and we're creating a platform where we're going to grow the company through that strategy in the next several months. Because as the precious metals sector goes into the next bull, we want to be positioned with the best available resource assets that any junior has in Mexico going forward.
Very good. So take me back a little bit. When you say that you can actually acquire ounces cheaper than you can find them, what specifically do you mean?
Finding costs on a specific project basis today are in the range of 40-50 cents an ounce silver. If you're successful. But you have to, when you look at that, that's just the project basis. You have to look at the rest of the company and where you spent your money. All the other projects that you went through before you actually made a discovery on a property. When you do that, you're getting up closely in a range of $1.20, $1.50 an ounce. And today you can acquire ounces in these public companies in a 10 to 20 cent range.
That's awesome. So you're getting something 20 cents that you know, rather than going out and hope you find something that may cost you $1.50 an ounce. Reminds me of Silver Standard. I remember when Bob Quartermain was running it, and his mandate was to buy silver in the ground at 5 cents an ounce. And it was one of our early recommendations, actually 65 cents Canadian. People kept saying, well, he's diluting. Well, he wasn't diluting. What he's doing is every time he acquired something, he's putting more ounces of silver per share, even though there was an increase in shares. So what happens with the North Air acquisition? What is there dilution? Is it additive? How does the share structure look, and what does the treasury look like?
Well, yes, it's going to be additive exactly for the reason you're stating. And what we're doing is we're issuing 0.35 of a Kootenay share for every North Air share, and an extra value in a tradable warrant that's going to come out. There's going to be a 0.15 warrant per Kootenay share that has a strike price of 55 cents for 5 years and tradable. So it's going to have huge optionality on increasing silver prices. The premium we're giving to North Air on a spot basis when we signed the agreement was 58% value.
Great. Well, as you know, Jim, one of the things we look at, of course, is the management people. You've done this before. You've got a strong record in the past with what you've done in the mining industry. But the other thing we look at is the institutional side, you know, who's involved with Kootenay, and of course now the new Kootenay, I'll call it. And why don't you name some of the institutional investors that are along with you?
Yeah, the shareholder base is going to look fantastic. Our major shareholders will be Coeur, Gold 2000, Agnico Eagle, and Sprott.
Excellent. Well, that's a pretty good lineup. And now you've got what? I think it's like $3.5 million in the treasury?
Yeah, post this transaction, we'll have 2.5 to 3 million post-transaction. We'll have 130 million shares issued as well.
Okay. So you're in the right spot. I mean, Mexico's favorable to silver. It's more or less in a district situation. Is that correct?
Yeah, so a couple things with this amalgamation. We're going to have two flagship assets, two really strong silver assets in Mexico. We're going to be sitting there post-amalgamation, like I said, with about 2.5–3 million cash, good strong treasury, plus approaching 150 million ounces of silver alone, 200 million on a silver equivalent basis. So a real strong position. As a consolidator, is going to put us in a place where we're going to be able to continue to acquire the best of the junior assets on a consolidation basis in Mexico.
Well, let me play the devil's advocate a little bit here, because I've certainly been in your seat for a while. The metals aren't going anywhere for another year. Is this a good thing for Kootenay or a bad thing for Kootenay?
Well, we think it's a good thing because we want to do further consolidation. There's a few assets there that look really good to us in Mexico, and we want to consolidate those as well. We want to have the best resource asset base of any junior coming out of this market, going into the next silver bull market.
So if things are to take off from here, you're in a great position with the assets that you already have, and if things are flat for a while longer, you've got a treasury and you've got the ability to take on even a stronger asset base. Is that correct?
Yeah, that's exactly right. This whole platform gives us better liquidity, larger size. It also gives us a lot of options on how we can advance our projects. We can consider JVs. We've got in Kootenay this current generative model where we're finding new projects all the time, bringing in partners to advance those. So we get a lot of flexibility. We're also working on a few things now. We're hoping in the next 60 days or so that we could be sitting with a $5 to $7 million treasury post-amalgamation.
Great. So as a shareholder, you've got shares in this stronger company that has the ability to weather the storm if it continues. You have a lot of leverage. You've got a tradable warrant. What's the overall exit strategy for Kootenay?
Well, yeah, the exit strategy will be pretty simple. We're going to become the provider of new or reserve replacement for the existing miners. That's the fact of the matter. They're not finding new ounces. New ounces are difficult to find. And we're going to consolidate the best of those ounces that we can in Mexico going forward. It'll put us in a position where we have a lot of flexibility of getting maybe one project into production, selling another project, or the whole company will maybe be so attractive that one of the seniors will buy the entire company.
Great. So strong management, proven track record, consolidation that's added to the shareholders, tradable warrant, which is unusual and gives you great leverage to the silver price. You're in great shape. If things continue sideways, you can acquire even more assets potentially. Exit strategy that's beneficial across the board, regardless of how it goes. Could be bought out, could be segued out part by part type of thing. Is there anything we haven't talked about that our viewers need to know about Kootenay Silver?
Well, I think they need to know the symbol, KTN, trades on the Toronto Venture Exchange. One other thing, this is, as you point out, this is a strategy that Silver Standard employed. I have personal experience with that same strategy when we had a company called National Gold in the year 2000. We bought an asset from Placer Dome called Mulatos. We brought in another junior called Alamos Minerals to help finance that project. It had over 2 million ounces of gold in it, but at that time not economic. When the gold price started recovering, we amalgamated those two companies called Alamos Gold. After the amalgamation, our market cap was $35 million. In 2012, it was $2 billion. So this is the strategy we want to employ with Kootenay.
Great. Well, Jim, always a pleasure. Every success. Thank you so much.
Thanks very much, David.